Welcome back to the deep dive. Today we're focusing on a really interesting story out of India's tech scene this quarter. It's the results from PB Fintech Ltd, the parent company for Policybazaar and Paisabazaar.
That's right. Our mission, essentially, is to unpack their unaudited, consolidated financials. This is for Q2 and the half year ending September 30th, 2025. So Q2 of FY26. We've looked at the official statements, the press release, and the earnings call commentary, all dropped on October 29th.
And the big takeaway, really the hook here, is that this quarter feels like, well, a genuine turning point. Since the IPO, it's often been about high growth, sure, but also that cash burn, right? This report, it looks like a real phase shift. They're showing sustained and actually massively scaled profitability now.
Exactly. It feels like we're moving beyond just, growth at any cost. Now it's about efficient execution. So let's dive into how they actually manage that transition.
Okay, section 1, the financial scorecard. Let's start top line. Consolidated operating revenue hit 1,614 crore.
Yeah, which is up 38% year over year. Solid growth. Definitely.
But like you said, the magic is what they did with that revenue.
That's the key. Look at the efficiency metrics. Profit after tax, PAT, it grew 165% year over year. Hit 135 crore for the quarter.
Wow, 165%.
Yeah. I mean, think about it. The profit grew more than 4 times faster than the revenue did.
Okay, so that kind of acceleration,
Yeah.
it suggests something fundamental changed. Cost structure, margin profile. Where's that efficiency really showing up?
It's very clear in the adjusted EBITDA, that metric. Grew 180% year over year, reached 156 crore. And crucially, this pushed their adjusted EBITDA margin from 5% last year's quarter all the way up to 10% now.
10%, okay.
So they've really managed to leverage that existing platform, monetize new customers at a much lower marginal cost.
And if you zoom out, look at the history. It's staggering. Back in Q2 FY22, around the IPO, their PRU margin was, what, negative 73%?
Yeah, a huge loss-making position then.
And now they swung that all the way to positive 8% in this quarter, Q2 FY26. That's a massive operational win.
It really is. And this brings up something quite interesting strategically. Management actually pointed out that this 135 crore PAT, it represents 1.77% of the total insurance premium they handled.
1.77% of total premium. That is a fascinating way to frame it.
It is, isn't it?
So if profitability is tied to the volume of premium, not just the commission on a single policy,
Yeah.
what does that tell us about their long game?
Well, it suggests they're not just chasing high margins per sale. They're aiming to be like the dominant utility for the whole Indian insurance market. If you can efficiently grab even a small slice, say 1.77% of a potentially massive market, they talk about 1 lakh crore in premium long term, that's an incredible scalable model.
Right, so prioritize market share, recurring volume,
Yeah.
over maybe higher immediate profit per transaction.
Exactly. Market dominance first.
And that puts that consistent scaling into perspective. Revenue grew at what, a 55% CAGR from Q2 FY22 to now?
Yep, 55% compound annual growth rate over 4 years. So this isn't just one good quarter. It's sustained scale, finally hitting that profitability inflection point.
Okay, let's move to section 2, the core engine. This is about protection and predictability.
Right. The main driver here is still the insurance business. Policybazaar itself and PB Partners. Total insurance premium was 7,605 crore this quarter. That's up 40% year-over-year. And the annualized run rate, it's north of 30,420 crore now.
And within that, the really high growth stuff,
Yeah.
it's the stable long-term value products, isn't it? New protection, premium health, and term insurance.
Precisely. That grew 44% year over year. And health insurance specifically really took off 60% year-over-year growth.
So why is that focus on protection so strategic? Why call it out?
Well, several reasons. Stability, for one. These products need more advice, so customers are maybe more committed. Plus, crucially, this protection number excludes the savings business, which can be quite volatile.
Okay, that's important. We should probably clarify that. What's in that savings bucket and why filter it out?
Sure. Savings is mostly things like ULX unit-linked insurance plans. They're basically investment products with an insurance wrapper. Sales there can swing wildly with the stock market, interest rates, tax changes, much less predictable.
Got it. So by looking at core new insurance premium,
Right, which grew a very consistent 39% year-over-year. They're showing investors, look, our core necessary protection business has grown steadily, quarter after quarter for like the last 10 quarters.
and that predictability, it gets cemented by renewals, doesn't it?
Absolutely. That renewal or trail revenue,
Yeah.
that's almost pure, predictable, long-term profit, it builds up over time. Their quarterly insurance renewal revenue is now at an ARR annual recurring revenue of 758 crore.
758 crore AR just from renewals.
Yeah, up 47% from 516 crore last year in Q2. It's a really significant profit cushion. Makes the whole model much more resilient.
There was also that interesting point in the notes about demand in September, despite some GST changes causing maybe some confusion.
Right, the announcements on the 5th and 22nd.
Yeah, they said those are the biggest demand days ever for Policybazaar. What does that signal?
Well, it suggests strong consumer trust, right? That people turn to the platform specifically because it can help navigate complexity, even regulatory changes.
Makes sense. Okay, but we also need to cover the other core pillar, Paisabazaar, the credit side. And here, the picture's a bit more mixed.
It is. Core credit revenue was actually down 22% year over year. Now, management says it's bottomed out.
Bottomed out.
And they point to 4% UQ revenue growth, 9% UQ growth in dispersals, which is encouraging, signs of life, but still, a 22% drop YoY, that's pretty substantial.
Yeah, 22% is quite a hit. So Q-o-Q growth is good, but what's the big risk factor looking ahead for credit, given that performance?
I'd say it remains the broader lending environment. Regulatory shifts, lender caution. These things impact credit availability and approval rates. Paisabazaar doesn't fully control that. They seem to be recovering from that industry-wide slowdown in unsecured loans. The QQ growth is a positive sign of stabilization.
But it needs to keep going, aggressively.
Exactly. To get back to the kind of growth they saw before the slowdown, the quarterly credit revenue was 106 crore. So smaller than insurance, but still important.
All right, let's shift gears. Section 3. The new initiatives. These are the future bets, right? PB Partners, PB for Business, PB UAE.
Yep. And overall revenue in this whole segment grew an impressive 61% year over year.
61%. Wow.
But here's the really strategic part, I think. It's not just the top line. It's the margin improvement. The adjusted EBITDA margin for this whole segment improved massively from negative 12% last year to just negative 4% this quarter.
Okay, so they're drastically cutting the cash burn needed to grow these new ventures.
Precisely. They're scaling up while simultaneously getting way more efficient. It's like they're timing the break-even point for just when these things hit real scale.
Smart. So which ones are the main drivers of this improvement?
Two stand out. First, PB Partners. That's their agent aggregator platform. It's really consolidating its lead over 380,000 advisors now. And growth is accelerating, premium growth at 56%. But it's not just numbers of advisors, it's reach.
Right, the geographical spread.
Yeah, PB Partners now covers 99% of India's PIN codes. They said they're present in over 19,000 locations.
So that's the answer to scaling outside the big cities. Tier 4, Tier 5 towns.
Seems like it's driving growth there.
But isn't there a risk, a trade-off between that kind of volume growth in smaller places and maybe maintaining margins or quality control?
Oh, absolutely. That's the operational challenge. The PB Partners model, it relies on high volume, lower cost per transaction using local expertise. But the strategic payoff is huge. It gives them access to markets the pure online model just can't capture as effectively. It's a critical long-term lever, even if the per-policy economics look different initially.
Okay, and the second big success story is international, PB UAE.
Yes, the UAE operation. This might be the most impressive bit in terms of localized efficiency. Premium there grew 64% YoY. And crucially, this business has been consistently profitable for 3 quarters now.
3 profitable quarters already.
Yeah. And their focus seems smart. High margin stuff like health and life insurance. Plus, they have this unique cross-border health insurance proposition.
For expats, you mentioned.
Exactly.
And the overall plan for this new initiative segment.
Yeah.
They want it close to break even soon.
That's what management said. Aiming for very close to zero adjusted EBITDA loss by FY27. So yeah, they're clearly signaling that this heavy investment phase, it's nearing its payoff.
Okay, section 4. Let's talk about the strategic differentiators. What underpins all these numbers? Tech, claims, the vision.
Right, because the financials are one thing, but stability comes from things like tech and customer trust. Their customer satisfaction, the CSI scores in insurance, they're consistently high, like 90.5% plus.
And that satisfaction, you have to assume, is heavily linked to claims. The moment of truth for insurance. How built out is that support now?
It's pretty extensive, actually. They mention specialized things like grief support for term insurance claims and 30-minute on-ground health claims assistance in over 200 cities. That's quite a
True.
commitment.
Wow, on ground in 30 minutes.
Yeah. And for motor insurance, their Assured Delivery program apparently has a 94% CSAT. So it's real investment in that high-touch human support for claims, which is vital for complex products.
It really sounds like that phygital approach we hear about. Online platform, yes, but backed by physical presence for the tricky parts like sales conversion and claims. Why is that hybrid model so important, especially for the high margin stuff like health and life?
Well, think about it. Health and life, they're complicated, they're expensive, you don't buy them often. People need advice, they need trust. So the phygital model kind of bridges that gap. The tech grabs the initial interest, maybe filters leads,
Right, efficient discovery.
but then the human touch through stores, through on-ground support that often closes the sale, provides reassurance, especially for those bigger long-term decisions. And that ultimately boosts conversion rates and, importantly, the average ticket size.
And the tech isn't just for sales, it's for risk assessment too, right?
Absolutely. They're using AI quite a bit, apparently, for sharper risk assessment, fraud detection, and just internal efficiency. They mentioned things like Gen AI for call assistance, using voice analytics to check interaction quality, remote inspections for motor claims. At their scale, even tiny efficiency gains from tech add up massively to the bottom line.
Okay, now before we wrap up with the long-term vision, we do need to touch on the regulatory disclosures.
Yeah.
Standard stuff in financials, but important context.
Yes, critical contest. The sources confirm they paid a penalty, 500 lakhs, levied by the IRDI, the insurance regulator. It related to observations from an older inspection. So it's a material adjustment tied to past compliance. Needs to be factored in.
And they also mentioned ongoing things, surveys, notices from GST and income tax, specifically against Paisabazaar.
That's right. There are ongoing proceedings and notices. Now, management's position, as stated,
What do they say?
they believe, based on their own assessment and legal advice, that these ongoing matters don't currently require material financial adjustments. So we report that impartially. They acknowledge the scrutiny, but they're confident in their position for now. It highlights the complex operating environment, definitely, but it's not flagged as a material financial risk by the company at this stage.
Okay, that's necessary context. So let's conclude then. The long-term vision reaffirmed on the earnings call.
Still very ambitious. They're actively working towards that huge aspiration. 1 lakh crore in premium facilitated, sometimes framed as aiming for a $1 trillion market size overall. And alongside that, targeting a PAPE margin of around 3% in the long run, maybe around 2030. It really paints a picture of them wanting to be this utility-like platform capturing massive volume with moderate but highly scalable profit margins.
Okay, so let's bring it all together for the listener. What's the key takeaway here?
Well, I think the Q2 results really show strong execution. They're shifting from just scale to profitable growth. The core protection business is throwing off that predictable trail revenue, which is great. And the new initiatives, PB Partners, UAE, they're rapidly improving profitability, getting ready for that next phase of self-funded scaling.
The financial health looks much stronger. So the question shifts a bit, maybe from internal execution to external impact. You mentioned that focus on protection, because the need in India is just immense.
So let's leave you with a final thought to chew on. We know the data shows India has one of the biggest protection gaps anywhere, like a 97% mortality protection gap. 66% of health spending is out of pocket. It's huge. You've seen the financial results from PB Fintech. They show the digital platform can work, it can scale profitably. So consider this. How effectively can platforms like these really leverage India's digital public infrastructure, UPI, Aadhaar, the India stack, to tackle this massive social security challenge? Can they move beyond just distributing existing products to actually helping build that Har family Hoagie insured reality? It's a place where platform success could translate directly into, well, significant social good. Definitely a deep dive worth thinking about. We'll see you next time.